Hey traders, this is Christian Promhertz, Tribeca Trade Group, and this is your end of day market recap for Monday, December 20th. Look at this, only 2 more weeks to go for 2021. So, with only a few days left to go, or well, maybe a little bit more than a few days, it's going to be an interesting end of the year, right? I mean, we'll see what kind of price action we get, and then really, what I think a lot of traders are doing at this point is, just kind of setting themselves up for next year and kind of getting ready for a whole new year. So, we're really excited about that at the Tribeca Trade Group. I think it's going to be a really sorry to say the same word, but it's going to be a very interesting year to trade. And some of these washouts that we're getting in some of these areas of the market, I think might set up pretty good for 2022. And it seems like what we've seen over the last couple of weeks is a decent unwinding out of some higher beta areas of the market. We've seen the defensives really rally coming into today. One of the things that I talked about in the member video was that all the defensives have rallied pretty hard. The consumer staples, the utilities, the REITs, the healthcare stocks. Those now move to the leaderboard in terms of best looking charts, and eventually that will change a bit, and it cycles through. And then, what we normally see is profit taking in those types of areas and redeploying. So I wanted to kind of start with today's video with, hey, we're right around the corner until a new year, and it's I think it's going to make for a very, I don't want to say a very good trading year yet because we're not there yet, and I don't have a crystal ball in terms of if it's going to be good trading, but I think things are going to be I think the reset button has been hit, basically on many areas that maybe went too far, in terms of the last year, and have come back down to probably, more at a reasonable valuation. Maybe not all the way back, in terms of historical norms. So anyway, I'm excited. I think that sets us up pretty nicely, that we've seen kind of a under the hood correction in some areas of the market. So I'm excited for that. And if you're not a member of Tribeca Trade Group, it's a great time to start and see how we tackle the new year. I think we're going to have a member webinar on just kind of the takeaways from this year, as well as some of the themes that we're going to be looking at for next year. We'll probably do that the first week of the new year, and as always, we'll turn in P&L. We continue to be I think one of the only I know that there's some other trading services out there, but there's only a few in terms of being transparent with their results. And we'll continue to do that month after month after month. We'll show results and how we're doing, and my goal again is to kind of to look to crush it for next year, and that's motivation, right? To kind of, I entered again what's it called? The investment contest, right? I think it's GSIC, I think is what it's called, right? So I look forward to that contest again next year, and I'll be, in a couple of weeks we'll have the results of this year's contest. So let me get to today's price action. I talked for a couple of minutes without even getting to today's price action, but more of the same of what we've been seeing. Just a little bit of more volatility in the market and a move down. And one of the things that I said in the midday video that members get every day is that I can't believe that we kind of started down 1%, and it's another gap down, and a lot of stocks that I saw just continue to move down again. Normally what we have seen the last couple of years is when we start down 1% for the day, it's usually been a good buying opportunity, right? It's usually been, you could find things that it kind of excites investors to find things down 1% to buy that dip. And over the last month, it's been very different. We haven't seen that, and we've seen things open up down 1%, and then they go down another 1 or 2%, or they go down 1% and they're down another half a percent. So that was the first half of the day. Things kind of shaped up a little bit, and I was a little bit, my message during the midday session was, be patient with this market. Let it kind of do what it wants to do. And we don't know if that many participants are still hanging around for the end of the year. I think a lot of, traders and investment firms are looking ahead to next year and taking off some vacation. I think there's some frustrated people out there and they're just saying, hey, I'll come back to this in the beginning of the year. Right. Well, that's not us. We kind of stick through it because sometimes there are some good trading opportunities. But specifically, what I thought, and we'll go over the S&P chart. So you can see we did move off the lows of the day. The afternoon was kind of what I was looking for. We saw breadth. If we want to look at the 5-minute bar just for a second, because you should be able to see how breadth went. Right. So we opened up, and things were not good in terms of breadth. We kind of, right around 10:15, things got a little bit better, but then we pushed back. Once we got to the afternoon, things got a little bit better. So you could see that the breadth did get a touch better. And that's kind of what we want to see, is that, like I said, the buyers kind of coming in and saying, hey, this is a little bit of a discount, and I can make some money off of this. Part of the issue too, if I'll just interject my own view here a little bit, is there's still some sellers in this market that are doing, for whatever reason, are just peeling back more exposure into this market. And there's all different types of investors that are out there and funds that are out there. So letting them kind of get through what they're trying to do. But for example, if you want to look at this Q's 5-minute day, right, or let's look at NASDAQ futures. But, these are big bars going back and forth. And we had tried to go higher here, right on the open. And you can see, look at the size of this 5-minute bar. So to me, there was a big wrestling going on in terms of bulls versus bears and funds unwinding. But you can see we tried to go higher in the beginning of the day, but just met with just heavy selling. We tried doing that in here a little bit too. You had one green bar, right? It looked like you're kind of going to build off of that. And then, it's, the sellers just pushing this market down. And then finally, I don't know, maybe those sellers either stopped trading towards the end of the day, or it's just the process of getting through. And I do think that it's it's a bit of a process of letting all those sellers kind of clean up what they're doing and getting back to where they want to be. And then we'll see things kind of hopefully improve. But even though the breadth did improve, it still was pretty nasty, right? So if we go back to this, right? So this is what I'm talking about, and in terms of being patient. We always talk about market breadth in terms of like the wind is at your face or the wind is at your back. The wind has been in your face now for weeks, right? And this is not, while it got a little bit better at the end of the day, it's still not optimal conditions. These are very, very hard conditions to trade in with, it's like, it's not a slight wind. There's a heavy wind in your face. Like, think of it as you're kind of running, right? And the wind is in your face. Like, that's how I perceive breadth right now. And that's nothing new. We've talked about that now for over a month. So that has to change. And I try to stay optimistic and say, okay, hopefully this is just something that has to, that we have to get through. And the goal for me is just, to not put myself in a hole in terms of losing money, right? Because I'm mostly playing things on the long side. Even though last week we found some good short opportunities in the trading room, I still play most things to the long side. So that means I just have to kind of wait and be patient for my setups to appear. So let's get to some of that. I want to go back to this S&P chart for a second. And looking at the 1 hour, notice that we're way below value to start the week. So we've got some work to do before we even hit resistance. But I think the 50-day moving average, notice that we're also below value for the month. One of the things that jumps off the page to me here, and I think an important point, is for now, we are above where we were in the beginning of the month, right? So so far, we're putting in a little bit of a higher low. Now, again, one day is not a trend. I say that all the time. But so far, so good, is we didn't take out. I don't want to see the lows being taken out here. Now, the other thing that we noticed, too, is while we were kind of testing the lows of the day, the VIX was not going much higher. So that's called, I refer to that as a bullish divergence, right? When the VIX, which you could see is 22, 23, it's not nearly as high as it was back at the end of November, the beginning of December. So I view that as a good thing too, right? If we were screaming back up here 34, 35, I would say, geez, I'm probably going to move to like back to where I was at the end of November, which was like 97% cash. Right around that beginning of the month. So I'm not that way now, but I'm still have a heavy cash, portion of my portfolio. But I'm starting to kind of, my goal today was to move back a bit into the market, right? To start taking positions if the charts and single names are supportive of that. So I wanted to go over that. Also, just IWM, I thought was interesting. At one point was down, I think, like 2.5% for the day. I still think that this chart is in trouble. Just by definition, below all the 5 peer moving averages. Now, I do like the hammer bar, but we've seen these before a bit, right? And they haven't led to much, right? There was one kind of here and two. So, bottom line is the price has to start to reclaim, at least the 5 peer moving average. So we'll continue to watch this and there are still, even if you don't like the shape or the pattern of a chart, you could still do a lot of day trading in this market. That was one of the things that we've tried to talk, kind of take away what this market is giving, which is good day trade setups, right? Because if you're mainly a swing trader, which I am more of a, that's my bread and butter is swing trading. This has not been a great market to swing trade in, but day trading, it's been pretty decent. All right, so one of the bright spots that I saw today, and again, this is a nasty looking chart, was the biotechs today. They were positive on the session. I've said this before, you probably haven't heard me say this in a while, but usually when we are in some type of a market dip or correction, seeing biotech kind of lead us out, or start to outperform out of a dip or correction, in my opinion, is like that's not a bad thing. And I generally think that is a pretty good indicator. So starting to see some things that look a bit better, that divergence between the VIX and the S&P is a good thing. And, seeing something like biotech do a little bit better. And if you look across groups, right, you'll start to see some things are kind of materializing a little bit. Tandem looks pretty good. Now, again, this isn't all biotech, right? Some of these are like medical devices, medical equipment. HOLX, which saw like a January 23 small call buyer, but still, this is a chart that I've seen before. Maybe this is going to kind of work out of this group. And then you see a lot of names that are trying to base, right? Like BMRN, right? Now, this isn't ready yet. This BMRN, it needs to break out of value, but we've talked about this before. Like after a pretty decent decline, this is usually what happens. You go sideways for a while. QDEL was one name that we talked about, right? In the which had a huge day today. I don't own any of this, unfortunately, but it was something that we saw towards the end of last week, and this was a name too that I talked about in the weekend member video as well. So QDEL very nice up to 174 today. And again, look at it out of it after a decline. Look at the base and now moving out of the base, right? In my opinion, that's what you want to see in a lot of setups that have had big declines. A V reversal is awesome, but more often than not, it's this. All right, so biotech looks interesting. Here's some of the trades that I did, and we'll go over a few more charts. Asan was something that I went long last week, right, on Friday. Hung on to, and I actually added to it this morning because it was, I think it was started the day down 2%. We'll have to see how this shapes up, right? So I managed to get this target off of the 79.50 VPOC. I mentioned that on Twitter as well, and now I'm sitting with the balance of the position. But you could see how I kind of attacked this. Added to position, took target 75, 79, 76 here and 79, and now I can sit comfortably with the last portion of the position. I actually tried trading CrowdStrike too for a little bit. I got a couple targets with this. I got a little bit worried when it pushed into value, but it actually came back upon. But I think there's actually better plays than CrowdStrike. Even though we'll see if this can kind of come out of this bear flag possibly the right way. But I think if you're looking across names, you're going to find like Zscaler might look a little bit better than that. It doesn't take that much to get this thing back above these two moving averages and maybe starting to recover. Sentinel One is another one that I'm watching. Don't have a position in, but watching. Right, and then going back to the software space, a CFLT looks interesting. A TTG member brought this one to my attention too, which I think is also a bit of cyber too, which is New Relic. Remember, this thing had a huge gap up, right, and has now come back into the 50-day moving average. It's trying to take back the 5 and the 20 period moving average. This one's definitely on my radar. So again, we're starting to see some things materialize. Another one that I'm looking at is Repligen, right? This thing's in a pattern of lower highs. So again, some of these things, they've got some work to do. I don't know why it's not. There we go. Right, but maybe this can kind of rise up to this top of value, and that would be just a small trade. All right, guys, I'm going to leave it here. That's it for today's video. And I think this market is made a little bit of improvement towards the end of today. I would love to see it build from there. And being a risk manager is very important right now. As bad as this market breadth is here, I do like the divergence that we saw today with the VIX and the S&P, and hopefully we can build off of that tomorrow. All right, guys, have a great night. See you tomorrow.